All right, so we finished section 2.1. Now we're moving on to point 2, okay? And this is to set up products and services. So again, describe and differentiate between products and services. So once again, there are only 4 types of products and services. So again, what do you need to know for each and every single one? Well, we know that there's an inventory item, non-inventory item. We have services and we have bundles. Right? Now, can we identify what each one represents? What do inventory items do?
With the inventory items, you will have your cost of goods sold.
Okay.
No, she meant your inventory items are the ones that you want to keep track of.
Right. Okay.
Physical items.
Okay.
Okay.
Okay, so products we sell that you want to keep track of. Okay? So then what's the difference between an inventory part and a non-inventory part?
Products that you don't necessarily need to keep track of.
Okay. Products we sell but do not necessarily keep track of. Okay? Keep track of in terms of quantity on hand. Okay? So make sure you are aware of that. Yes, you keep track of them through sales, but not quantity on hand. Okay? All right. And then, of course, what are services?
Services you sell.
Okay. Without using the name service, what does a service do?
Trying to find another word for service is so crazy.
What do we normally associate?
Our retouching, it was one. Our when we actually took the photo shoot, that was one. So it involves people doing something for our customers.
Right. So in this case, here, maybe this will better clarify. Anything that involves with time or labor. Right? If someone is basing a photo session based on how many hours you've done, that's time, right? Mm-hmm. Now, labor is in terms of they're not providing you a product, they're probably making something for you. That's considered labor, right? Mm-hmm. So in this case, time or labor that is provided to customers. Okay. And then of course, how do we use bundles?
It's a combination of inventory and services.
Combination of products and services in a package. Okay. Okay. All right. So then can we identify the information that you will be needing for each product and service? Okay, so I'm going to go ahead and link this up here. Okay, so What kind of information do you need for making an inventory item? Okay? You will be needing to know your beginning balance, right? Or beginning quantity on hand. Right? You're going to be needing to link your asset account, sales info, and cost info, right? Putting in your sales price, putting in where you're going to be designating the sales account to go to, right? And then for cost, you need to designate how much that item costs you and who you purchase these products from and where you're designating the cost of goods sold to, right? So all of those, okay? Whereas the non-inventory part, you have to associate all of these except for you don't need to put your beginning balance in there, right? Not required. Okay? Services, what do you do here? Obviously, you don't have actual products to sell. So in this case, all you're filling out is your sales price, your sales info, and if you have a cost, right? Same thing here, but if you don't have an inventory asset, okay, cost info. Okay. And then bundles, what do you have to have in order to create a bundle? You need to have the inventory items, non-inventory items, and services entered in your list ahead of time in order to create a bundle, right? If you want to make a bundle package, you have to already have the items in the products and services list before you can even create a bundle, right? All right. And here's something what's also unique is you do not set any sales price on the bundle. Okay. Describe reasoning for setting up products and services, right? That's pretty straightforward, right? Why would you set up your products and services? Why would you need to set up your products and services?
Because that's how you get paid.
Okay. What benefit does it do for the business?
Oh.
Besides getting paid. Why is it important that you need to have a products and services list?
So your customers would know what type of service you provide.
Excellent. So you know what products and services you sell or provide to customers, right? You should know that, right? The whole purpose of running a business is, are you going to be selling a product or are you going to be selling a service? What are those products and services? You should know what your business is about. Because ultimately, if you're confused, you don't know what you're doing, you're going to struggle opening up your business because you don't have a clear vision of what you want, right? Ultimate goal is you are trying to either sell a product or provide a service to customers. Next one says contrast inventory products and non-inventory. We already said that up there. Okay. All right. 2.3. Okay. I'm going to actually hold on. Let me add a few things that you need to know for this section, okay? Let me see where I want to add it. Okay? In this case, right? You can change non-inventory and service items into inventory items, but you cannot change inventory items to non-inventory or service. Okay? Because once you create that running balance, you can't undo it. So in this case, you can modify, and let's say eventually one of your items gets picked up, right? And then so on and so forth, right? Okay. 2.3, managing sales information or settings. So in this case, customizing sales forms, right? What do we see here? How do you customize those sales forms? Right? So let's talk about how. Right? Let's talk about what first, okay? What do you need sales forms for? What are sales forms? Sales forms is a way to record your products and services that you sell to your customer, right?
Right.
Why do you need that?
Because the company and the customers need to know how much would they paid for the product or service.
Correct. Company and customers need to know what they are paying for, right?
Right.
And on top of that, it's also proof that a transaction has occurred. Right? It is a paper trail, a record that you had an exchange. Right? Now, how do I create those sales forms? There's two ways that you're able to do it, right? If you go to the gear icon and you go to your account settings under sales at the top window, you can create custom sales forms, okay? Or you could go to gear icon, and then you could just select custom form styles, right? And there you're able to create your form how you want to do it. So email messages, forms, describe the purpose of activating customer discounts, describe the Intuit QuickBooks payments features. Okay, so let's start with when you're customizing the form, what features do you have? Customizing. Right? What features do you have when you can customize a form? You should know how to do that, right? So in this case, you're going to go to custom forms, right? Custom form styles, right? You're going to right, once you get here, you're going to go ahead and create a new form. Oh, wait, hold on. I think I'm in the wrong one. Let's do it again. Custom, QuickBooks. Custom form styles. Okay, right. And then if you click on one of these, right, what can you do? Right, you have 3 tabs at the top. You got first one is design, second one is content, and the third one is email. So again, this is where you can also customize your email, right? So under design, you can start with the very basics of what kind of style do you want your form to be, what kind of colors you want to put on there. Do you want to put a company logo on there? What kind of font you want to put in there, and also you know, you go to content, you can see like what information you want to have on the sales form and so on and so forth. You can customize it by typing personal messages on there. Okay, under email, you could see how if people want to use paperless statements or paperless bills, this is what you could format it to what you want to show, appear, yada yada. Okay, so that's there. So again, so you have design, content, and you have emails. Okay, so that will answer the next question about customizing your messages for emails, right? So again, design could be layout, colors, fonts. Okay, content is going to be literally content like addresses, emails, messages, right? Whatever you want to put on there. Okay? And of course, you can also further customize it by changing the layout of how it looks, right? You just click on it and click and drag, right? So again, there you go. So explore that option there. This is also another chapter 2 thing. We did take a look at customizing our sales forms in chapter 2. Okay. Next one says describe the purpose of activating customer discounts. Okay. In this case, this is going to be a gear setting under accounts and settings under sales tab, right? You have the option to turn on discounts. Okay. Now, what does that do? That again, it allows you to give discounts to your customers, right? And we have that coded to discounts given, right? All right, so you want to go ahead and take a look at that exact section there under your customers discounts. What's going to be in chapter 5, right? When we look at giving your customers terms, customer credits or credit memos, excuse me, and so on and so forth, right? What are the circumstances of giving those customer discounts? Okay, so that means by activating that setting on there, it's going to automatically appear at the bottom of your form to allow your customer to allow you to give a discount to your customer for the overall amount on your form. Okay. Describe the Intuit QuickBooks payments features and how it offers for transaction payments. And it offers traditional payments. So in this case, right, it's talking about the QuickBooks payments subscription, right? I believe that is also in chapter 5. So in there, it should talk about QuickBooks payment subscription. So in this case, right, we talked about how with payment subscriptions, it allows your customers to pay via credit card through online payments. Okay, and with this subscription, it also pays the credit card companies a the percentage rate for accepting credit card payments. So remember that rule, because you're when you accept credit card payments, right? You're basically telling the credit card company, collect the money for me, and pay me up front. And because they're paying you up front for the products and services that the customer is purchasing from you, they're taking the responsibility of dealing with the accounts receivable on your end. As in, you don't care about the customer's account balance or anything, because they are using the credit card company to owe instead of us, right? So that's the huge feature right there. Is it's paying those credit card companies, because of course they're not going to do that for free, right? They're going to be expecting a certain percentage to go ahead and take the debt off of your hands. So in this case, because they're going to be managing that person's accounts receivable, and that they're going to be held responsible for if and when that customer faults on their payments, right? Instead of you have to pay them a certain percentage, or it could be a flat rate depending on what it is. So that's why credit card companies, they get to make money on both ends, off of the customer and off of the vendor, merchant, whoever uses the credit card company. Okay, and so that's exactly what it does here. Is it makes those payments for that certain percentage, right? This also allows you as a company to manage your credit card payments. Okay? If you pay online, right? Or if you do online banking, then you could just attach your banking and your credit card on there. But what this means is, so if a vendor or if a customer decides to return a product and services, this will, for the company, because you have to give back and send back that money back to that person's credit card. That is what it means. It helps you manage the company can help you manage your credit card for those payments, right? For those customers that want refunds and things like that. But also, it does it also for if in case you decide to buy something as well, and with your credit card. So again, very cool feature. Okay. 2.4. Okay. We're going to be recording basic money in transactions. So we have here is going to be describing the money in transaction workflow. Okay. What is this talking about? If you remember from chapter 1, we talked about your dashboard. Okay. We talked about your dashboard, right? And we talked about the first tab, which is getting things done. If you click on that section here, this is where you get to view your money in workflow. Okay. Now, I did not talk about using your dashboard, but you can actually use your dashboard to enter in your transactions, right? So if I need to enter a sales receipt, I could do it right there. If I need to record time, if I need to do an invoice, all right, so create invoice, so I'd be able to do that here. So this is the money in terms of how are you collecting money for your business, right? How are you going to go through the collections of money? How do you earn your income? So again, that's the workflow here. You're going to be dealing with your customers, right? You're going to be dealing with if you want to create any estimates. You're going to be selling products and services to your customers. You're going to be creating creating invoices where you're going to be collecting payments. Okay? And ultimately, where does that money go? It's going to go directly to your bank. Okay? All right? So that's the understanding of the flow there. So again, we're looking at selling a product and service, right? So you're going to be issuing an invoice. You're going to be expecting to receive a payment from your customer. And ultimately, where does that money go? You're going to deposit the money into your bank, So making sure you understand that particular workflow and understanding how that works, right? So go ahead and fill that section in yourself, okay? Next section is record and manage invoices and sales receipt. What's the difference between an invoice and a sales receipt? Why do we need to know the difference between the two?
Okay, the invoice is a proposed service that's being billed.
Okay, being billed. So what does that mean? Does the customer pay you now or pay you later?
Pay you later.
Exactly. So here is where you're going to record income or record sale, record sales but customer pays after sale. Okay? What about your sales receipts?
The sales receipt is the actual purchase of product or service. And
Okay.
that's your proof that you paid for it.
Not you, but the customer.
But the customer.
Yes. So record sales and customer pays at time of sale. Okay, so that's the difference. One of them, you're billing your customer. The other one, you are receiving the money right then and there. Okay, so that is the difference between the two. Okay, now in this case, what you're going to notice is these two forms are exactly identical. Okay, so these two forms are exactly identical. Difference is one will have receive payment option. Right? The sales receipt will give you the options of how the customer paid, right? That's the only difference between the two. While the other one doesn't have that option to receive any payments, but it does have terms. So that's the most important one there, okay? That one of them will have the receive payments option and the other one, and other one will have terms. Okay, because obviously you're not gonna have terms for a sales receipt, right? Because they paid at time of service. Where terms is gonna give you a time frame for the customer to pay you back within. So that's the huge difference there. Okay, they are exactly the same. They're formatted with putting in the person, putting in the date, putting in what number you're coding this sales transaction to. Then you'll list out your products and services, and so on and so forth. The only difference is one, the option for the customer to pay, and the other one is for the option to bill your customer and give them a time frame. Okay. All right. Receive, record, and manage payments, undeposited funds, and deposits. So let's go ahead and talk about that. Okay. Right. We're going to talk about the accounting behind the scene. When you're going to record an invoice, what happens? What happens when you record an invoice? In terms of accounting, what are you increasing? You do need to know this.
Accounts receivable?
Good. You're increasing accounts receivable. Okay. Okay, which is another terminology used for customers owing you money, right?
Right.
Customer IOU. Okay. Once you receive a payment, right, you have to use the receive payments window. Receive payments. What does a receive payment do? When you receive a payment from a customer,
It goes into your sales and into your bank.
no. How does it affect your accounts receivable when you receive a payment from a
It
customer?
decreases it.
It decreases accounts receivable. Okay? All right? And then when you receive a payment and it decreases accounts receivable, it also increases undeposited funds.
Okay.
Right? Remember? When you receive a check from a customer, where does the money go?
It goes into your bank.
Does it is that true? If you receive a check, does it go to your bank?
Okay, you have to deposit it into your bank.
You have to deposit it into your bank. So that's why we're going to, when you collect that check or receive the payment from your customer, you decrease the accounts receivable, but you're increasing the undeposited funds because now you actually need to make the deposit, right? You actually have to physically go to the bank or use your online banking mobile app and take a picture of the check. But at the end of the day, you have to physically make a deposit to your bank. Okay, and that will ultimately decrease undeposited funds and increase checking. Right, it will increase your checking account. Right, you finally got money in the bank. Right, always. You have to always think about that too. Even if you sold money or did a transaction in store, well, where's that money going to be? It's going to be in your store because you haven't deposited into the bank yet. So that's why it's so important that you understand what the undeposited funds do. Again, think of it in real life, right? Money's not going to appear in your checking account. You have to physically make those bank deposits. Okay. And last but not least, recording credit memos and refunds receipts. Okay. Make sure you know the difference between the two. Yes, there is a huge difference. Okay. So let's talk about credit memos. What do you use credit memos for? Okay, if you need a reference point, chapter 5. Okay. Right? We use credit memos when a customer decides to cancel an order, right? You give them a discount, right? Or a customer overpays, right? And you also use it for bad debt. Most important thing about the chapter here is the bad debt section. Okay? All right? So that one, and then what about a refund? Okay? Refund receipt. Okay? Is when customers actually return products and or service. Okay? And whether you use it if they paid with cash, check, or credit card. So that's a huge one there. Right? Where this one, right, you typically use a credit memo if you are going to apply to invoices. Okay, so that's a huge difference one there, okay? Is that credit memos are usually used for invoices, right? Where refunds and stuff are going to be more primarily used for people who've already paid via cash, credit card, or check, right? They already paid and you're refunding them actual money, right? Where a credit memo is usually applicable to be applied to an invoice. So that's the huge difference there. Okay. So again, understand what the functionality of these do. So again, credit memos, they reduce your accounts receivable because you're applying them to an invoice. So that's why when you have a bad debt, it would just completely zero out the accounts receivable. So understand that, okay? That credit memos decrease accounts receivable, while refunds receipts reduce your checking account. Okay, so I can go ahead and put that here. Okay. All right, let's try to spend 15 more minutes to try to get the rest more questions done here. So now that we're completely done with chapter or section 2 here, again, do not stop here. I encourage you to fully go through this and make sure that there are a few things that maybe I missed here, but I'm trying to get through the general idea. So again, do your work and again, fill this out to its completeness. So in this case, I may skip around or I may abbreviate. So again, fill those extra gaps in there, right? All right, number 3, vendors and money out. Okay, so again, managing your vendors' records. So same again, describe how to identify existing customers as vendors. Okay, so again, so display name we mentioned is truly important. You cannot have a vendor and a customer with the exact identical name because once again, we have the idea of that whole algorithm. The display name cannot be identical, whether it's a customer, vendor, employee, or whatever it is, right? So in this case, if you have a customer who is also a vendor or a vendor who is a customer as well, you want to make sure that the display name has a unique feature to associate the difference between vendor and customer, right? So the example they gave you in the book is if it's let's say it's Donna Distributing, right? you could say Donna distributing vendor, or V for vendor, okay? And then you can have Donna distributing C for customer, right? That's what they usually say that you can do. That's the reference point there. You put this under the display name, okay? All right, describe when and how to merge vendor accounts, okay? So once again, this is going to be the same exact steps as merging accounts and items, okay? The only difference is they don't have to have like a account type or a detailed type, right? Those don't matter, but you do want to pick between the two, pick which one you want to keep. You edit the one that you want to copy the name that you want, and then you edit the vendor's information to override the content for the display name to override it to the correct name that you do want. So that's what I mean by the same exact steps as merging accounts. So again, you guys can fill that information in. Okay. Describe how and add to change vendor terms. Okay, and then how and why to identify vendors as 1099 contractors. Okay, so in this case, it doesn't really tell you about how to edit people. Okay, so in this case, that is definitely something that I think you should also know how to do. How to add, edit, and delete. So in this case, right, add is pretty straightforward too. It's the same as accounts or same as lists, right? So let's say I want to add a vendor, right? You can go to the vendor center. So I'm going to go to expenses and go to my vendor center. How do I add a vendor? Same exact idea. It's top right corner, right? And at this time, it actually says new vendor. Now, again, you also have the ability to import your vendors list. So therefore, import vendors list, right? Go review that in chapter 2 where how to import your list. And then I believe in chapter 4, they also do it again as well to help you show you how to import your vendors list. Okay, so in this case, make sure that you know that you can import your vendors list. Okay, edit. Edit is going to be different. It's not going to be the same as accounts, right? In this case, if you want to edit a vendor's information, you need to click on the vendor to see their profile, right? And then you're going to click vendor detail, and that's where you're able to edit the information. You cannot do it directly in the vendor center, okay? Let's show you, okay? If I were to go ahead and edit my vendor, can I be able to go to the manage or more actions? No, you don't have that option. You can make them inactive. That one's for surely the same, but you cannot edit the information. You have to click on the vendor's profile to edit the information. Okay? So again, click on vendor profile or vendor name to view profile. Then you're going to select vendor detail, and then top right edit. Okay, that's the huge difference between the lists that you are used to doing. And of course, deleting, you cannot delete vendors either. You can either edit the you can either make inactive or merge, right? Which we already talked about merging up there. Okay, and we already saw how to make them inactive, right? It's the same steps as you for your list. Describe how to add or change vendor payment terms. How do you do that? Okay, how do you add terms to a vendor? How do you add terms to a vendor?
When you set up the vendor, it has the terms that you can set up at the bottom of that.
Okay, perfect. You would have to, if you're trying to add it or edit, you're going to need to edit or what is it? On vendor detail info. So again, set up vendor info. You have the section to designate terms. Okay? Or what can you do? On sales or on bill or expense form, you can add terms. Yeah, you can quick add terms right then and there. Okay? Right? Because you may, let's say you designate them to have you pay and have them pay or have you pay them in 30 days, right? But what you can also do is, what if they decided to say, hey, since you're a long-time customer, I'm going to give you an opportunity for a 1% discount. You can quick add that indirectly into the actual form itself. So that means if you pay within the terms, right, the vendor should offer you that discount. Okay, so that is where you can also quick add that directly into the form. Describe and how and why to identify vendors as 1099 contractors. Why do we need to do that? So again, in vendor profile or setup window, right? You have a section to enter vendor's social security number or EIN. And what is the option that you can do? You can check to track vendor as 1099. Why is it so important that you have to keep track of your vendors as
Taxes.
a 1099? Yes.
Taxes.
For tax purposes. Okay. Right? And again, we skipped that section on how to process your 1099. So again, that was chapter 11. Okay? So again, I'm going to put here chapter 11, how to process 1099. Okay? Now again, how do you pay 1099s? You simply do this just how you pay your bills. That is all standard and regular. But the only difference here is you need to process 1099 forms differently than your W-2 forms, okay? Than your W-2 employees. So that's what's different there, okay? All right. Okay. All right, so let's see. Here says describe how and why to activate expense tracking by customer. Okay, before I continue on there, make sure you know who your vendors are. So in this case, that is something you should definitely also know as well. Right? Who should be on your vendors list? So remember, vendors are people who you purchase products from. Okay, your suppliers, they are your people who provide services to you. So if you need to get some contracting work done, let's say you need to have some plumbing done in your store, that's considered a service that you're going to be using. Your internet provider, your gas electricity company, all of those are going to be providers to you, right? Service providers. And this will also include your 1099 workers too, because they are people that you contract to provide a good or service from, right? So in this case, that is important that you know your 1099 workers are going to be on there. Okay. So yeah, so let's go ahead and describe it, why to activate expense tracking by customer. So what's so important about this one? Okay, so this one is going to be looking at billable expenses, right? Where do we see this? Chapter 9, or in this case, billable expenses, or this is also known as job costing. Okay, so we see this predominantly in Chapter 9. Okay, where we can pass bills to customers, pass bills along to customers for the customer to pay for bill. Okay, so that's what it does here. Is you're basically, instead of you paying for the expense, you're gonna have your customer pay for the expense, right? Usually this is because you are purchasing or requiring a specific service that for this particular customer. Okay, so in this case, let me describe that. When a customer asks for a specific product or service. Okay, so for example, right, if they want a custom frame, right, that frame is only designated to what the customer wants, right? It's probably going to be what the customer wants their picture to be on. They get to pick out the type of frame that they want, whether it's metal, wood, or whatever type of material. They can determine the size. So in this case, that specific order is designated to that particular customer. Custom frames doesn't go for anybody. So therefore, you can purchase that. So they're using you as a third party, as a middleman, to buy the product for that particular customer. So in this case, that's what I mean by custom frame. It's like it's a custom order. Okay? Right? So therefore, you can have the customer pay for that bill along, and you can choose to mark up your prices as well. So again, you can mark up prices. Okay, and if they require, let's say for example, they want you to have videographers be at a specific place at a specific time, then you need to go out and connect with those contractors to designate it to that particular job. Okay, so in this case, that's why it's called job costing. Is because when you are designated a specific task for a specific job, that's where you can bill the customer for saying, hey, you asked me for 2 videographers, I got you. But their prices, because they're my contractors, I pay them for what they cost me, but I'm going to go ahead and forward that bill to my customer to pay for the service that they provide. So that is the difference there, right? If they are requiring a specific service on a specific date, right? So again, yeah. Okay. So again, you could go ahead and build those items along, okay? All right, so let me see. Describe when and how to make expenses and items billable. So again, on your sales form, and it's actually going to be on your bill form as well, right? You will have the section to bill your customers, right? It will give you that little option to check mark whether it's billable or not. So it's going to ask you billable, right? And you will check if you want to bill. And then there is a column to designate the customer / job, right? So who are you going to bill? Who are you going to send the bill to? Send the bill to. Okay? And then you'll get that markup option as well. Right? So that's how you're going to do that. Now remember, you need to set those settings up in your gear icon, right? So this are your account settings. You need to go to gear icon, account settings, under expenses tab. Right? And turn on billable expenses. Or else, if you don't ever do that, this section right here in your sales and purchase order forms or bills, whatever, will not appear if you do not have this turned on. Okay? Last but not least, describe and how to identify billable expenses. So again, you would just do run your unbilled expenses report. Okay? So again, you can type that into your report center and you should be able to find it, okay? All right, so this is where we're going to stop here for today. That means when we come back, we'll finish up the rest of this. So I may have to move a little quicker tomorrow just to make sure that we get everything answered to its completeness. Okay, so we only have, let me see, half of section 3. Oh, actually, no, we're almost done with section 3. We have section 4 and section 5 left. So just a little more left to go. All right. And tomorrow, I'm also going to give you the details in regards to your exam. Okay, so again,